Hello and welcome to another update video about Bitcoin. In this video we're going to take a look at what Bitcoin is doing here also on the higher time frame. We start on the higher time frame and then work our way towards the 4-hour and 1-hour time frames. I think that is very relevant because tomorrow we've got an important day. We've got the Fed interest rate decision. I will also do a live stream, and I think it's good to be prepared to know about the possible outcomes, because when we are watching the interest rate statement and the minutes are being released by the FOMC, you get a lot of, the market will want to do a lot of things at the same time, and that usually leads to a lot of volatility. So don't take some of that movement too serious, which is going to happen tomorrow. It will be a lot of movement in a very short period of time, and it won't be able, you will not be able to try to catch up on all the different waves, because some of it is just going to be irrational movement, and then we can look at it when the dust has settled. But from experience I can tell you that there will be a lot of volatility. I think especially tomorrow will be, or is going to be a very important one, because it's the first statement this year, the first interest rate decision in 2023. A lot of movements, and a lot of the markets are looking quite positive at the moment. The metals market, crypto has been recovering, really good performance since the beginning of the year. And also, the S&P 500 is starting to move up. So we have a lot of markets starting to get interesting. The energy market hasn't really picked up. For example, gas is still down, but I think we are going to see a very exciting 2023. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials, and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Okay, so let's take a look at the daily time frame first. We continue to be in a situation where, sure, it's possible that the bear market low was down here at around in November, middle of November, around 15.2k, 15.3k. But the price action just does not confirm it yet. I mean, you will ask, why does he say it doesn't confirm it yet? Well, we see upside surely, but just green candles alone do not confirm that a bear market low has been made. We need a bit of structure, and I always try to explain it by comparing it to the end of 2021, when we already talked end of November, beginning of December 2021 about an upcoming drop for Bitcoin below 30k, or I think it was below 29.7k. That was basically a given when we broke below, I think, 56k. So that was the point when I told you that the bear market is starting. But also please be aware that until when a lot of people were still waiting for the 100k, but I had to wait for the price to move around 17% to the downside to be able to confirm that we are heading into a bear market. Now, same way now, we cannot just see the green candles and the price has moved up, substantially. I mean, it's moved up like, 50% from the low. But we cannot just say, right, the price has moved up 50%. We are still like 65% down from the all-time high, right? So I can't easily say yet that the price we are getting back into a bull run, even though we see strong impulsive movements, and I'm going to explain why. So I still see this as a wave one, the rally in 2021. Then we came down in A wave, moved up in an overshooting B wave. We're now coming down in C. Again, the C wave could be in, but what I have on the chart here is still a possible scenario where we'll still see another low. I mean, again, if this is a wave one up back in April 21, A, B, C in a wave two, then this wave two could still end with a new low. Alternatively, I would say, alternatively, you could say it has already finished. I just cannot make it the primary expectation yet because we haven't really got the structure to confirm it. And I'm showing you why, because this move down looked very corrective, a three-wave move down. Surely you could count it as the wave 5 in an ending diagonal. That's why the alternative here. But just understand that surely the low could be in. We see a lot of indicators currently that the low was in already, and that the November low was the bear market low, but it's just not confirmed yet. And the reason is that there is still one very, very clear and very straightforward Elliott wave pattern that could still easily send us to new lows, and that is a so-called expanded flat correction, where this was an A wave, this here is a B wave, and we are moving down in a C wave at the moment. The C wave is an impulse, so having 5 waves here is not the issue. And in fact, if you measure the length of the A wave and you go to the low of the B wave, I mean, the 1.618 extension is at basically 28K. That's the ideal target for a C wave. I mean, we're not even there, okay? And again, I can only repeat it because we get a lot of new viewers all the time. When can we confirm that a bear market low is in? Well, it will become, let's say, my primary expectation as soon as we have seen the 5 waves and the 3 waves down. 5 waves in themselves are not enough. You've just seen why, because an ABC correction consists of a C wave, which is a 5-wave move. So that in itself will not confirm it. But in this ABC structure, the following move down should be in 5 waves. So if we stop here somewhere, where I would be able to give you a key support area for that, then we can confirm the low is in. I mean, that is strictly only the second level of confirmation that you get. There are 3. The third one will be if we break above the wave 1 high. Now, again, do you want to wait to buy until then? Some people might choose to. I wouldn't. Yeah, I'm going to buy the pullback. But then again, it's all about being strategic, I'm already dollar cost averaging into Bitcoin. I did throughout the bear market, and mainly Bitcoin, Ethereum. However, I'll be much more, let's call it aggressive, when we have a confirmed low, which means maybe a bit of leverage here and there, maybe larger positions and so on, But yeah, that's where we are. And just knowing that we could still make another low means I will still keep cash aside for those lower prices, okay? It's all about probabilities. There are no certainties. In the end, you might see that the people who said the low was already in might be right, but at the moment it's only guessing. And I could say that, but it would not be backed by evidence. Yeah, because only price action confirms. It is we have indicators, but they only indicate. Price action always needs to confirm. That's also why indicators are wrong so often, so many times. Indicators in themselves are only indicating. They can help you, but they will not be able to forecast the future for you. Okay, as long as we have all understood that, we can dive now into the lower level price action. So price continues to be moving up, which is what we currently anticipate, generally higher prices. And this is the wave pattern we've been talking about since middle of December. We are moving higher here in an impulsive move, and generally higher prices are still expected as long as we're holding the 20K level. That's not only a key Fibonacci support, that's also it's a relevant psychological level, 20,000. So what you need to understand though is that we are heading into a key resistance area up here. So we've got this area from back in August where the price was rejected from several times. Yeah, we hit the ceiling here, and the bulls had many difficulties to push higher, and we see that we're entering this area now you can see how the price is struggling to get higher and higher and higher. But price action currently suggests we should still be able to push higher at least once in this fifth wave. So at the moment I'm looking at, first of all, the green count here, 1. So let's start with the yellow count. So as I said, it could be we are in the yellow count, 1, 2, 3, 4, 5. And within the third wave, this is the relevant count that we look at in the short term, 1, 2, 3. So we probably topped in the 3 here last week. We're now coming down in the, finally, in the expected fourth wave. And we should get one, as long as we're holding this green support area, we should rally in a wave 5 into the, let's call it 25k plus range. Yeah, and then that fifth wave could complete possibly only the third here. There might be a fourth and a fifth. We'll take it from there. So if we now zoom in, just that you understand how is the fourth wave support area calculated. We take, so I currently assume the wave 3 topped here at 23.8k. Could also have topped here, which was on Sunday, a little bit higher, but I've placed it now at a slightly lower level. That allows me to also set the support area a bit lower and allows me to rather be a bit on the safe side, right? Because only below the 50% retracement, 20,090, I mean, let's call it 20,000, only there the wave 4 will get unrealistic and we risk going into a much deeper bear market from there, yeah? And I think we're now on our way to make lower lows here in this fourth wave. So let's take a closer look now at this fourth wave. And just to give you some perspective with Ethereum, I currently assume the wave 3 topped here, which is technically also possible for Bitcoin, but less likely in my opinion. That would shift the support area down a little bit. That's why we can say right 20k, okay? When this third wave topped, which was at around, what do we say, 23.8k, yeah? After that, we could say that we came down in an A wave. We had a support area which did hold at the time, which was a long trade possibility. Anybody who did that could make some profits and lock in some profits. We, however, never really substantially broke out above the previous high. So we then could see a 5-wave move down, yeah? So until in the last video, I mean, this is still possible. Yeah, in the last video, we talked about the yellow count, yeah, that we could be here in a 5-wave move down in the yellow wave count. This has, however, now really maxed out what it can do and actually briefly pushed above the 50% level. Already made the channel members on Discord and Telegram aware like a couple of hours ago that it's probably not going to hold this resistance area. I mean, at the moment it does, but it is most likely, in my opinion, rather a wave 2, and that also fits much better the proportions. So if we say, and that's what I've got for the Ethereum chart as well, that we already finished a wave 1 here, we're now in a wave 2 scenario. We actually touched the target box already and got rejected from it. So that's actually a short trade setup. Here a so-called 1-2 setup for Elliott Wave. That we could be in the C wave, but that we've only done the 1-2 setup. Well, the wave 2 is not necessarily finished yet. So we could still push a bit higher, and that we then come down in a third wave further down in this C wave. And if we take a look at this resistance area, this is between 23,230 and 23,650. That's the relevant resistance area here for a wave 2. And then we should come down in a third wave. Now, we already got rejected, but we haven't really pushed down. We haven't made a new low since then. So to really have evidence that the third wave has started, we should at least take the recent low out at 22,800. That would be good evidence that a wave 3 has started. And if we then break below the low of the wave 1, we've got all the confirmations that we need. That would be a break below 22.5k. What would be a target for the third wave? Well, I can at the moment only base it on the last high. So that target might shift a little bit depending on how high we eventually go. But let's base it on the last high, which was here the possible wave 2 high. Target for the third wave would then be the 20,850 level. So I think, stuff like that could happen tomorrow. We'll see, or maybe even before tomorrow in anticipation of what's coming. A lot of irrational price action we can see as a result, and also in anticipation of the Fed interest rate decision. Could very well be we see the sell-off before and then a rally afterwards, sort of a relief rally. Let's see. what you need to know are these pivot and decision points. Yeah, so key is as well to understand that if we break above the white resistance box, so that would be a break above 23,650 pretty much, that would be a break above the 78.6 retracement of the wave 1. That would rather again make this wave 2 less likely, and it looks then like that, you know, we might have a bottom already, and maybe we've bottomed already. Yeah, but in all likelihood that should hold. Now again, it should, not that it will, but it should. It's all about likelihoods. If it's a wave 2, it should hold, because only a few wave 2s get above that level, yeah? And if they do, maybe only briefly. If it goes substantially above it, then we might have a different structure here. It's all very choppy anyway. Bit of a range still, you know, we haven't really broken out of the range substantially. So don't get me wrong, this could still be some kind of an extension of the B wave or whatever, you know, if it really wants to test our patience. But yeah, this is another setup, could come down in the third wave. We're running into resistance. You can see how relevant the resistance is, because we got rejected here clearly 3 times from this 50% retracement, and the bulls and the bears continue to fight, but we're currently consolidating at a pretty high level, which at the moment would suggest that we can still push a bit higher into this area. Yeah? We haven't really been rejected and made a new low. So that's sort of where we currently are with regards to Bitcoin. And we could also calculate just the target of the C wave. Target for the C wave would take us down to 21,860. Now, this is obviously just purely the target for the C wave. I would say take a look at that level, see what happens when we approach it. But if we go through it, then we probably see an extension of the C wave, and it will then get more likely that actually, yes, we are following here the extended 5-wave move to the downside in a C wave. Would be a very short wave A compared to the C, but happens, yeah. And maybe eventually, because it could be we are still in the correction, because this is still, you know, corrective mass, that we might get something different eventually. But this doesn't change the assumption that we're currently in a wave 4. It's really only trying to understand the mechanics of how this is currently unfolding. Good, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.